Alrighty, welcome traders. We're going to go through the December 20th, 2023 trade recaps and quick market update. Let's just jump a quick look at the market on the day for Wednesday the 20th. We can see here on SPY, we had a nice down day. So finally, a decent drop in the market. Maybe that's going to be very short-lived, but at least it was a nice drop. So you opened up here right around the 473, closed all the way down at 462. So pretty good down day here. So I like the 50-point, 70-point drop in the session. We were overbought on the RSI. We were above the 3 ATR, and that brought us back all the way to the 2 ATR level. So a nice little pullback on the session. I think it's going to be short-lived, but overall, it was a nice pullback on the day here. Overall, doesn't really change any of the focus on the weekly. The weekly has just been stupidly high for roughly 8 weeks in a row. Let's see if it continues. Do we bounce from here, finish the week higher, or do we end our 8-week, really 7-week streak? Do we end it this week? We'll see what happens. The Qs, same thing. Nice pullback on the day. MACD took a down day. RSI dropping lower. Do we continue this downtrend, or is just a nice little pullback? I kind of think it's just a nice little temporary pullback, maybe down to the 21 EMA on either SPY or the Qs, or may not even get that low. If we take a look at IWM, pretty much the same thing. IWM hit that mark that I've been talking about here, right around this 198.75 level that we have failed at just numerous times over the last year or so. It's just 1, 2, 3, and now 4 times hitting this exact same level, and every single time we have sold off decently. Is this going to be different? Do we finally break above it and get moving? I don't know, but right now the weekly still looks pretty strong. So weekly IWM looks strong. The daily still looks decent, but you're getting a little bit of a pullback here. Can we get a pullback and a bounce? Do we take this trend line here and bounce higher? We'll wait and see. Again, I'm not in the business of predicting. I'm just looking at what the market's giving right in front of me right now, and I still say we are temporarily overbought on the daily, but the weekly still look decent on all of these major averages. Getting a little frothy, but I think any kind of a pullback here that could be met with some additional buying would be something to watch. All right. So there's where we are on all of that. We did end up dropping on the percentage of stocks hitting their 50-day moving average, or above their 50-day moving average on the S&P. I had called this out, that every time that we had hit this 90% level, we have fallen, and we have fallen decently after that. And yesterday, was maybe the first of this drop. We had a bearish PSR reversal signal on this index or indicator, and MACD is now falling. RSI is falling. So do we have some more bearishness ahead? Any bounce here, to me, I would be skeptical of on it. VIX dropped fractionally on the day. I'm sorry, rose decently on the day yesterday. I'm looking at this morning here a bit. But yeah, VIX popped all the way up to 1350. Wow. Craziness. Just a gigantic jump in volatility there. Again, it's so low that I don't think there's anything to get too excited about on it. If we take a look at the dollar did gap up. So the dollar was higher on the session on Wednesday. The 10-year was lower on the session and looks to continue to sell off, which means TLT is still on an upward trajectory. So as rates continue to fall here, all right, you're seeing TLT moving up as well. How does that affect anything out there? Well, if we look at Forex, it was a down day on the Aussie dollar, a down day on the British pound, a down day on the Canadian dollar, and a down day on the euro. A couple more down days, and these start to look pretty interesting to me. I think I would like to see a little bit more of a pullback, which doesn't look like we're going to get on Thursday morning at all. But I'd like to see a little bit more of a pullback, maybe towards the 21. If we can get to the 21, I think Strangles set up really, really, really well on both of these, or on any of these Forex. But for me, the two would be the Aussie dollar or the euro. Those are my two favorites. But you could look at the British pound. British pound's not bad. It's actually better than the others when it comes to potentially strangling it here. So oil on the session pulled back a bit yesterday. We still had a nice up move. Anything here would be just a little bit of a pullback and some profit taking potentially. We'll watch how far that pullback goes. But for this week, we're really starting to get somewhat of a turnaround on the MACD. But 1 week, an RSI, 1 week does not make a trend. So we're still in a downtrend. And then gold dropping fractionally on the day yesterday on Wednesday. So gold dropping down. Pretty flat MACD. It's not moving as gold's just consolidating sideways. I think you have to now watch this level, which dates back to here. It's been a pretty decent little level. See if I can get a flat line on it. It's not easy to do with the charts here, but there we go. So you have somewhat of a ascending triangle here forming on gold. I think a break above this level, which is really 2058. So if we can get above 2058 overall, and we're sitting at 2051 right now as I'm talking to you. If we can give above that, I think gold makes another potential run higher. I think gold is a good opportunity in here. We'll keep an eye on it. And I mean, we can maybe clean this up just a fraction here. But I think gold looks like it can potentially start to move higher. Bonds, like nothing I'm going to do here as this thing is just moving above the 3 ATRs. It's overbought. I'm not getting long bonds at this time, whether it's the 10-year or the 30-year, doesn't matter to me. Copper, I do like the way copper looks as well. It continues to move higher here. Solid weekly uptrend, solid daily uptrend. I'm pretty bullish on it. You could even start to look here as we can draw these lines across here. There's some resistance in this area. We fell yesterday, but potentially on Thursday here, we might get a turnaround. If we can break above this, I think you have some good upside. In fact, I think there's at least a 10% upside potentially in copper. So I want to be long copper here. We got into a 112 trade on copper in the service. That trade is up 77% in 3 days. So we're up nicely on it. I wish I had done more, and I might try to do something else that's bullish here on copper. So I do like copper here. We do have a live cattle trade still on. You're starting to get some reversal here at these lows. MACD and RSI, second week of reversals on those, which is a good sign. And then if we look here at the daily, you've got MACD moving higher and RSI moving higher. I like live cattle. I like where it is. I think very bullish on this particular chart right now. I think we could also run higher here. And then nat gas, I'm just flirting around with trying to put some sort of a trade on in nat gas. We really broke this downtrend back here. We moved outside of it. We came back, touched it yesterday, and now do we get a little bit of a bounce? I think the risk reward here on nat gas for like a 112 trade or something, I think is pretty good heading into the colder times of winter. Taking a look at the sectors yesterday on the day, just a quick, I'm just going to pick a few of them. XLK, so tech stocks definitely heading lower. XLY, your consumer discretionary, pretty good down day on the day. Communications, your Google and your Meta, down day on the day. Energy here, also down day on the day. Financials, pretty good sized down day here. It was overbought, so nothing Nothing extraordinary. Let's look at some defensive sectors like healthcare also dropping, utilities also dropping on the day. Utilities had a pretty good pullback. I think it's an interesting chart now. You've broken this, you broke the uptrend. We've now broken it. So now it's really watching how far does this thing go down. We're going to hit 60 or somewhere around here. I would say between the 2 and 3 ATR would be my bet. But we'll see what happens. At least that's the near-term target. Real estate down day and XLI down day, so your industrials as well. Semis, conductors, which have had a fantastic run up, pretty good pullback on the day as well. And if we look at the gold miners, good pullback. I like this pullback. I think it's really constructive. I'm not afraid to potentially look to get long here on the gold miners as well. I think this pullback was an opportunity that if you missed it before, this might give you an opportunity to get long. I'm bullish the miners into next year. And if we look at the major stocks out there, Apple, pretty good down day as RSI and MACD are falling. Microsoft, pretty good down day. You're not really seeing the same MACD falling though. So Microsoft's really holding up well here. Amazon, two decent down days in a row. MACD starting to flip over with RSI dropping. We'll see if that continues. I expect at least a little reversal on Thursday, at least at the open. Meta running higher. Still looks bullish. I still think Meta is a good looking stock. Google gapped higher, finished well off of its highs on the session, but Google looks really good too. So Meta and Google, which means one way to play the two of them together is XLC here. It's a good potential opportunity to get long on those. NVIDIA, good down day on the session. I'm still going to keep the dream alive that at some point we're going to come down, maybe, and fill this gap down here. We'll see if that ever happens. It may never happen. But look at this channel for NVIDIA. So if you really look at this channel that we've been in on NVIDIA, let's see if we can just hone in on it a little bit more. Dating back quite a ways, all the way back to June of this year, where we were in this channel, the bottom. We've moved up, down to the bottom, up to the top, down to the bottom, moved up, not to the top, down to the bottom, up to the top, back down, back up to the top. We just can't seem to break through this 500 level. Every time we've gotten there, this thing has sold off. Now, MACD is dropping just for one day. RSI is dropping a bit here. If we're looking at the weekly, just kind of sideways movement here. It's been a great stock to really strangle, I think, for quite a while on it. So something interesting to keep an eye on there, I think. Looking at Tesla as well, pretty good down day, but you did break out of this triangle pattern to the upside. First you broke to the downside, then you broke to the upside. We'll see which side's going to win on it. If we really extend this out a bit more, probably you can pull it down to this bottom of this piece here. So we've tapped on it, tapped on it, tapped on it, tapped on it again yesterday on Wednesday here. I think tomorrow, Thursday, as we're looking at this, a gap up or a move up. We are still in a squeeze. This thing's getting ready to move, and I'm going to guess that move is more likely than not to be to the upside. So I think Tesla gives you an opportunity to potentially get long. How would I play these right now? I think butterfly trades are the best opportunity for you. They are low risk, high reward trades. With the market being as extended as it is, and a lot of things being overbought, I think the safest, best way is butterfly trades right now. Okay, I think just buying calls, not smart at the top here. Because I think you have a lot of downside. Those could be 100% losers, but I think if you've got a butterfly trade on, you're not spending a lot of money. You can get long a lot of these names. You can take some shots out there, maybe put a handful of butterflies on, and that would give you some good potential opportunities if we rally further out there. All right, let's take a look at our account on the day. We did finish the day with a 106 positive delta right now. So we're just slightly positive delta. Again, it's as close to delta neutral as we can be on the entire portfolio. Theta 868 right now. So theta is a little light, but again, volatility is super light, as we've been talking about. So it's not the worst thing in the world. I'd like to get more theta in this account. Our net lick did move up more, so 332, 537. We are, again, just fractionally from a new all-time high in the account. BP up just a fraction to 58, of which 10% of that's bill, so we're really sitting at 48. We have some room if this is where we are on the day tomorrow. So we do have some room potentially to get some trades on. If I'm looking, after hours here on it, our BP has moved up a bit here. Now, we did take another loss yesterday. 39.80 was the loss on the day. Yet another ES strangle. So we took a loss on another ES strangle. We closed it right before the market reversed and headed lower. Otherwise, we'd still be in that trade at this point in time. But another strangle loss. Again, overall, strangles are they're now dropped to third place, though, but they're really tied with 112s. Still an 88% win rate overall on strangles. We've still made $23,000. I'll still take 23 grand and an almost 90% win rate on it. They just dropped below with that strangle yesterday on it, and we were in this trade for 44 days. So again, we were in this trade a month and a half ago, okay, before the market just went parabolic straight up. So we didn't put this trade on while the market was in the middle of that, rise higher. We put this trade on back here on 11.6, and when we look at where we were on 11.6, the market was actually, pretty flat for the most part. But we are sitting at about 436, 437 on SPY, and we were in really pretty good shape. Still a little bit bullish, but nothing crazy. And then we had the massive gap and run, and that's really what cooked this strangle eventually. Now, we did close two other trades yesterday. So we had a strangle on oil come off for a winner, 50% winner on that. So again, another strangle winner. And then we also had a naked put on oil come off at a 50% winner in 10 days. So both this ES and the oil strangles, we were in both of those trades for 44 days. One was a winner, one was a loser. And that's the way it goes. We try to keep them similarly sized so that we keep our ratios about the same. Otherwise, I'm still happy with the win rate. I'm not stopping strangles. I'm not going to stop a trade that gives me an 88 to a 90% win rate and generates $20,000 to $30,000 in cash a year. There would be no reason to stop that. 112 futures generating almost the same amount, with a much higher win rate, which is great. But they do also take more buying power on these 112 futures. Just to give you a quick look in here, if I'm looking at strangles and 112s, strangles, I'm taking in about 2,500 nowadays on my strangles for 6,000 in buying power. Okay, 50% of that is going to be around $1,200 on 6 grand, 6 to 8 grand. But if you're looking at 112 trades, standard 112 trades, I'm taking in 1,800 using $10,000, $9,000, $20,000, whether it's gold or LE or CL or even ES here. All right, much higher buying power. Right, it's strangles give you more opportunity to make money on less buying power. So the buying power is lower and the ROI is higher. So my ROI on some of these is going to be around $1,000 on average using 10 to 13,000. My ROI here is going to be around the 1,200 using half of that. Okay. Now I do have loss opportunities here on the strangles, but I think overall strangles are by far the #1 best ROI trades that we have on. You have a 90% win rate. You have half the buying power that you have in doing 1-1-2 trades. I think it's a no-brainer to keep doing strangles. So we will keep those on. We're not really changing our focus here. We had 3 losers. So 2 ES ones on this ES move higher this month that barely just caught us out on it, but we're going to get back in, add some more strangles. And if we get any more pullback on ES, I think I'll wait till ES gets back inside that 2 ATR range. And then we'll look to put another strangle on. I'd love to see some increased vol, even though that's not critical. And one of the things we did a discussion on, if you haven't seen it, I will put a link to it in the chat. But if you haven't seen it and you want to go to YouTube, go to the Mr. Top Tick YouTube channel. You can see a Q&A Igor and I did with our members yesterday. Go ahead and watch that video. Igor's got it on the Mr. Top Tick channel, so you can watch that discussion that we had with the members. But I really spent some time on strangles yesterday. I also spent a lot of time on hedging there yesterday. So we talked a lot about hedging. I told you why I don't like a lot of hedges out there. I prefer to just have my 2x stops, and that's how I hedge. If you think back, well, how did you do in COVID? And well, COVID was not an overnight 10% drop. COVID was a 30% drop over 30 days. Okay, so there was 30 days from the start to the bottom of COVID that we sold off. So in 30 days, it was not an overnight 20% or something that we dropped. COVID was a fast, kinda downtrend, okay? But it took 30 days to get to the bottom of COVID. There was plenty of time to make adjustments and look what you're doing. But for me, I have a 2x stop. If I stopped everything at 2x, everything in this account at 2x, my total loss would be $64,000, okay, on a $330,000 account. Okay, so that would be almost 20%. That is before any hedges that I have on. Okay, and I would be counting some of these hedges. There's a lot of just put debit spread trades on that would help offset that. I'm not talking the ones that still have the naked puts on. I'm talking about the ones where I've already closed the naked puts. I'm sitting on 1, 2, 3, 4. So I'm sitting on 4 put debit spreads. I'm also sitting on a 60 DTE hedge in the market. And some of those trades that I'm talking about taking a 2x loss on are not in ES. So just because the market drops doesn't mean oil, gold, and live cattle are all going to drop and stop me out at a 2x loss. So I'm overreacting with a $64,000 loss if everything hits a 2x stop. There, but I have a lot of put debit spreads on, and each of those, some of those are FB trades, some of those are standard 1-1-2 trades. Standard 1-1-2 trade is going to give me a 50 wide, so it's going to give me essentially, $2,500, or what is it, $5,000. So I'll take in $5,000 because I'm using 2 contracts, right, on a 50 wide. So 50 wide. 50 multiplier, 2 contracts, $5,000. And I just told you I have handfuls of those on. So if I'm looking at 1, 2, 3, 4 of those particular trades right now, so if I got 4 of those and they all hit $5,000, I'm going to recoup 20 grand of that. So that's going to put me at a loss of about 40,000, which is now just a little bit over 10%. Plus I have a hedge that's going to pay me on a 10% drop or even more, is going to pay me somewhere in the neighborhood of 30 to 40,000 or more. So now I think that I'm going to be pretty close to recovering most of my loss the way I'm set up right now. So I don't need black swan hedges. I'm not buying 3 of these, 5 of these. I'm not doing any crazy. If you bought a 2 delta, okay, and let's say you own 3 of them. Okay, if you own 3 2 delta puts on ES, you have to drop over 1,000 points in the market before that thing starts to really create any kind of a gain. You might get a couple $100, maybe even $1,000 on that. The market has to go down ridiculously far for a black swan hedge at 2 or 3 delta in ES to really start to kick in. That's not good enough for me. I prefer a little bit better hedge. So we talked about hedging yesterday. if you have a 2x stop and you adhere to your trading plan and you stop out if as you need to, okay, and you're taking off the naked puts as they come to that 90-95%, and you're sitting on a bunch of put debit spreads, those are going to kick in. So you don't need to hedge a ton on your portfolio. The biggest thing you have to worry about in a sell-off is your buying power. Okay? The easiest way to fix that is you just buy some puts, okay, in ES, and it'll free up your buying power. Or potentially when you close 1 or 2 trades at 2x, if that's what's needed to do that, then you're going to free up your buying power. So it's really keeping your buying power available to you so that you can make moves. You can roll as well. You can't roll, though, if you don't have any buying power. So your key with hedging, in my opinion, is give yourself the opportunity to, if you stop out, that's your trade plan. I'm okay with that. I'm okay taking a 10, 11% loss when you're making 30 to 40% a year. A huge sell-off like COVID doesn't happen every year. So I will be happy making 30 to 40% every year. And then once every 5 years or so, I take a middle of the year 20% loss. I lose half of my gains for the year and I only make 20%, okay, or maybe 10% that year. And then every other year I make 30 or 40%. So I think you got to be smart about what you do, but everybody has different risk tolerances. And if you can't sleep at night, then you need to hedge. All right. Hope this was helpful to you. If you like the discussions here, you like what we're talking about, go ahead and click that like button. It would certainly help me. It would get the word out to more people. We can help more people. If you're not a subscriber to the YouTube channel here, go ahead and click that. If you want to see the Q&A discussion with our Discord members that Igor and I did yesterday, I will put a link down in the description here. You can go over to that channel and watch that YouTube video as well. All right, everybody have a safe evening and day today, and we'll be back in the markets with some more updates on Thursday. Take care, everybody. Bye-bye.